Hello, everybody. It is March 6th, 2024, and it's time for a very long overdue edition of 2 Minutes with Jeff. So let's get right into it. I want to do a State of the Union real estate edition because we have that coming up, the actual State of the Union for the United States coming up this week. So I think it'd be a fun thing to kind of do a State of the Union of what's going on in the real estate market. So interest rates. Let's talk about interest rates. Interest rates peaked last year at an all-time high, over 7%, close to 8%, and have come down significantly. Today, I'm looking right now at a website. It says the national average is around 6.41%. So just we could say 6.5%. So it's come down since all-time highs, which is good. The reason why that is because we can look to everybody's favorite financial guru, Jerome Powell, who is the Federal Reserve Chairman, who actually testified in front of the House Financial Services Committee today and was talking about inflation and taking questions from the committee, asking if he was optimistic about cutting rates this year. And he's kind of in a tricky spot because originally the Powell said that March was going to be a thought of when we could do the next rate cut. Inflation numbers came out in January, and they're actually a little bit higher than what was expected. And so the plan for cutting rates in March totally was just shut down. So, the Fed, their goal to battle inflation, which it seems like we've been battling for 4 years, 3 years, a long time now, since COVID, is to get the inflation rate down to 2%. That's the magic number, 2%. And I think right now we're at 3.3%. So it's coming down from what it was. If you remember, there were times when it was 7, 8, 10. I mean, things have gone up crazy prices. So the Fed's goal ultimately is get the inflation down to 2%. So that's not meaning mortgage rates are 2%. That's just the prime rate for the Fed is 2%, or I'm sorry, inflation is 2%. Prime rate for the Fed is targeted somewhere around 5.5%. That's what they want to get it down to. Mortgage rates are kind of correlated to that, but not really. More towards the 10-year Treasury note and 30-year Treasury note is what they're more connected to. Anyway, long story short, Powell went on to say that we expect inflation to come down and the economy to keep growing. If that's the case, it'll be appropriate for interest rates to come down significantly over the coming years. So over the coming years. So this is not a short-term plan for the Federal Reserve to slash rates, in one fell swoop. This is a long-term plan for them. So that's kind of the news that we had today based on Jerome Powell's comments. Let's talk a little bit about market activity now. Market activity, we are in the beginning of March, and everybody knows, if you've lived in Michigan a long time, that the real estate cycle picks up about springtime. Springtime is the home selling season in Michigan. People are really not crazy about moving in the winter months. November, December, January, February are kind of just like bad times to move if you don't have to, because there's the snow, although we didn't really have snow this year. It's just a lot of variables, and it's just not the peak time to move. So we're approaching this spring selling season, I guess you could say. And compared to last year, I think that there's going to be on an overall more home sales volume. Volume is going to go up now as opposed to last year. And I'll give you my reasoning behind that. So I think last year, a lot of buyers were cautious based on interest rates and what they were and the rates itself. And people were kind of sitting on the sidelines waiting to see if the rates would come down. I think now it's kind of more normalized. We're in a more normalized year where people are just kind of accepted the interest rates are not going to really significantly come down, and people are going to accept it. And buyers, have kind of come to realization that the fact that the rates are really not going to come down that much. So if I need to buy, probably now is a good time to do it. If what Jerome Powell is saying is true and the economy keeps growing in the future, rates are going to come down. So you can buy a house today at a 6.5% interest rate. couple years from now, the interest rates can come down. You can look at refinancing depending on, the equity in the house and things like that. So buyers are coming to terms with this notion, I believe. And we're seeing like a little bit more of an uptick activity, but not a ton. But again, that was kind of in the winter months, the slow season. So I expect the spring season to be a little bit more active, a little bit more busier than last year. Now, sellers, on the other hand, and again, this goes back to one of the, I would say, principles of why it's difficult right now for buyers. It still is. Even though there's not the bidding wars anymore where you have to sell your kidneys to get the house, those days are over with. But the supply and demand issue is not. And sellers right now are totally content with staying put. If they don't need to sell, they don't have a reason to sell. There's no duress, some sort of specific life event that happened that somebody needs to sell. They're not going to. So, that's still out there for buyers to keep in mind, that inventory is still going to be low, especially at kind of like your, I would say 100,000 to 250, maybe closer to 300, that range. That's like the sweet spot. That's like the majority of where most of the sales in Metro Detroit happen. That is going to be an area where, just not a lot of people are selling, because if you think about it, let's say somebody, I don't know, I can't remember the number off the top of my head, but it's like, 80% of all mortgages right now have less than a 4% interest rate. So, if you don't have to sell for any reason, let's just say you want to sell because you want to move into another house. Okay, you sell your house, you got this low interest rate, great. Your payment, if you get a bigger house, which most people, that's why they move, they need more space or whatever, they just need more space, a bigger house. Your payment is going to increase dramatically because the interest rates have increased dramatically. So it's kind of like a catch-22 for sellers. They don't want to sell if they don't have to. People are staying put. They're content with their low interest rate, their low payment. They buy a new house at 6.5, 6.75. Their payment's almost doubling. I mean, it's just not a place where sellers want to be voluntarily. So that is what poses the biggest challenge for buyers in this market. But we all know that transactions are going to happen no matter what. People have to move. There's things that happen. So transactions are going to happen all the time. And like I said before, I think they're going to be a little bit higher this coming year in 2024 than they were last year, just the volume, the amount of transactions. Let's talk about prices real quick. I know a lot of the times you hear on the news more of like national numbers. There are some markets nationally that saw a decline in housing prices. San Francisco, it's more of like your big metropolitan, metropolis communities. They sometimes in some neighborhoods or some areas, they had negative appreciation. I guess it would be depreciation in housing values. That's not the case locally in Metro Detroit. Metro Detroit saw another uptick of appreciation for housing values. I know City of Detroit proper values got a huge increase from year over year numbers. And, across the board, we saw anywhere 4-5%, all the way up to 10%. And like I said, Detroit saw a huge increase. I don't have the exact number, but I saw on Bigger Pockets and made like the top 5 markets that appreciated in 2023. So, locally, the market's doing well. Housing prices are still going up. And again, that's like a supply and demand kind of principle. Not a lot of houses for sale, more buyers out there than there are houses for sale. That drives prices up. I mean, that's the key principle in everything. It didn't matter with COVID or, interest rates or that. The key basic principle is supply and demand in real estate. It's a supply and demand driven market, I guess you could say. So locally, numbers are doing good as far as appreciating. Again, nationally, you're going to hear in the news that, some places are coming down, LA, San Francisco, that's not Metro Detroit. Metro Detroit, the market is still strong and healthy. Yeah, there's going to be certain specifics if you drill down in specific areas and location where it might have seen some value decreases for whatever reason. But I would just say as a whole, like the hyper-local Metro Detroit market saw an increase year over year. And I think that's going to continue because things have really not changed too much, supply and demand wise. And interest rates, I kind of plateaued and leveled off. And I don't really see them going down, if any, a ton this year, maybe slightly. It is an election year. So I know that, they're going to try to make things look as most positive, the economy when it gets close to November and election time. But I still think that the values are going to go up. Interest rates are going to stay pretty close to where they're at right now. So that's just my 2 cents. I know it was longer than 2 minutes, but I did want to give you the state of the union, state of the market outlook. And that's going to be it for this week's 2 Minutes with Jeff. I have something in the works. I don't want to announce it right now because I don't know if it's going to start this week or next week, but we're going to start incorporating a little different video series, I guess you could say. So I'm kind of excited for that. It's kind of in the planning stages, so I don't want to leak it out too much, but I'll give you guys updates with that. But until then, I'll catch you next time.